My name's Grant Cardone. This is the Cardone Zone every day, every damn day. I'm going to show you how to get money a lot cheaper than this. Hey, get yourself in a position to sit in that chair right there. Are you the solution or are you the problem?
Yeah, well, we're talking about what does it take?
They don't know you and they're not thinking about you. They do
forgot
know
you.
you and they're not thinking about you.
They forgot you. My name's Grant Cardone. You are in the Cardone Zone where I wake you up, I shake you up, I punch you in the face, but mostly, I'm that good uncle.
What's happening, Grant Cardone?
Yeah, what's happening, man? You got a deal or you got a question? Hey, welcome to Real Estate Investing Made Simple at the Cardone Zone every Monday. Every Monday I come to you to talk about real estate, how to play the game of cash flow units over time equals the appreciation. I share this formula. If you can understand this formula, the formula goes like this. Number of units. Number one, most important thing in the real estate game is the number of units times cash flow. Cash flow, net cash flow plus time equals appreciation. You know, there's an old joke in real estate. Real estate always goes up. It's just who owns it. At the time, it went up. Okay, because it can cycle up and down, just so you know. Single family homes, duplexes, quads, residential real estate. We talk about commercial real estate here. We talk about storage. You name it, we'll talk about it. Office. But what we focus on here is units, residential units. If you Google a search for an article right now, I think it's Forbes magazine or Forbes newspaper. The title of the article is 2019 Real Estate Investment Preview. The fundamental forces that have driven rents and home prices higher will continue unabated. Studio goes quiet. I dropped the mic. There are so many reasons why this story is going to go on. I was just in Cabo San Lucas and the guy said, what happens if interest rates go up? Let me tell you what happens to real estate, to the type of properties that we're buying. If interest rates go up in this country, today they're at 2.69, that's a 10-year treasury, and you typically get a 1.6 spread over that. Okay, this is a very complicated parts of the real estate game. I'm borrowing money today at 4.29%. I just signed a $59 million obligation. Ask Ryan to bring that paperwork in. Literally right before I walked in here, I signed this documentation that I would pay $59 million back at 4.29%, interest only for 6 years of the 10 years. The gentleman this weekend in Cabo San Lucas said, what if interest rates go up? Okay, bro, let's say they go up. Okay, they haven't been going up, by the way. For 12 years now, they've been sliding downward. But let's say they go up. Let's say they go to 6%. Okay, or they go to 5%. Okay, that's not much higher than they are right here. I'm paying 4.929%. Let's say they go to 6%. What's the first thing in this country affected if rents go to 6%? Okay, home purchases, not this purchase. I'm going to talk today about the home versus the multifamily. That's one of the things we want to focus on today. Where do you want to get started? Where do you want to play? The first place, if interest rates go up in this country, the first place that will be affected is homes. Interest rate complications. homes will stop. We already have a problem in this country with people buying homes. You got millennials that owe $1.5 trillion. That's not $1 billion. That's $1 trillion. Is that right? That is nuts. $1.5 trillion is owed by millennials, and that $1.5 trillion keeps them from buying a home. But if interest rates go to 6% right here, it makes it harder for the millennial to buy a home. Number one, homes. Number two, autos. Autos will get crushed in this country if interest rates go up. This is what you guys don't know. Interest rates are not paid by consumers. Interest rates are paid by the manufacturers that subsidize the rate. Subsidize means this. Have you ever seen an ad with Chrysler or Nissan or BMW? 0% interest for 72 months. That means the manufacturer is subsidizing. They're paying for the cost of that capital. They're borrowing money for 4.29%, maybe less. BMW, Chevrolet, big companies, they could be buying that money for 2.69. That's the 10-year. They could be borrowing the money for that, but they're not getting it for zero. They're not getting the money for zero, right? So BMW or General Motors is paying 2.69% for 6 years for you to buy a home, for you to buy a car. They're like, 0% interest. Natalie, it doesn't cost you anything to own this car. 0%. The money's free. Well, if it goes to 6%, they can't keep doing that, and or it crushes that manufacturer. And if it increases their obligation, what happens? It lowers their margins and they can't hire people, okay? So the second place to get affected is autos. The third place that will get affected is the credit card companies. You guys are already getting crushed on credit cards anyway. This will be a minor effect, no big deal. 18's 18. If they go to 6, it's still going to be 18. Call me 305-865-8668, 305-866. But here's the other problem. Did I finish? 305-865-8668. 305-865-8668. I've been working deals all morning. Hey, did you bring me that thing I just signed? The Woodway Square deal. Okay. But the federal government, how much money does the federal government owe? If their rate goes from 2.69 to 6%, this country's over. And if this country's over, China's over. Singapore's over. Mexico. Dude, y'all don't need to worry about a wall. You need to worry about the U.S. economy, importing stuff. Canada will get stranglehold, tapped out like McConnor against my boy from the other side. Okay, look, let's talk today about this. Let's talk about this ongoing. Can you give me the image? Pop the image. We're going to talk about single family verse. We're going to just simplify this thing for you guys, all right? Can you put that off to the side? Or send it to me and I'll throw it in here. We're going to talk about one house, okay? This is the ongoing conversation. One house is $800 a month. You rent it for $800 a month. Let's say you paid, what did I use in that example? How much did they pay for that house? Let's say this house is $100,000. Now, let's say this house is, oops, the front door went away. Got a little. And let's say this house is, how much did I say in the example? Francisco, do you see it? It says it rents for $1,500. Okay, here it is. Okay. Okay, let's say this house rents for $1,500. And let's say it's worth $80,000 bucks. You're going to go buy this house, fix it. Yeah, this is what I just signed. Where's all the yellow stuff? All the yellow stuff that I signed. I like the little yellow things on here, man. Anyway, this is a document with Fannie Mae application. A loan for $58,600,000, 10 years, 72 months of interest only, followed by 30-year amortization, 9.5 years. I have what's called yield maintenance. Can you show them this? My personal document I just signed. I signed this, by the way, at Cardone Capital. The partners don't sign it. I sign it. I'm responsible for the debt. You're not. So watch. I got one single family home. It makes $1,500 a month. My other example is what? You want to pop it back up on the screen? Okay. How many units do I have in this example? 16 or so? Yeah, it does.
It wasn't the same as the other one.
Okay. 32 units. I got 32 units here. I got 32 units. times 800. So this is the simplicity of single family versus multifamily. This is one unit. I paid $80,000 for it. It's a good deal. My note on this is probably $4,800 a year. Okay, I'm earning, I don't know, $18,000 a year. You're like, man, this is a great deal. I'm killing it over here. Let's say we get a great deal on both of these. Which one do you want to be in? Do you want to be in one unit times 1,500, or do you want 32 units to pay you half that? Let me tell you where you want to be when the economy crashes. When the economy crashes, folks, you do not want to be in this deal, no matter how good this deal is today. You do not want to be in a single door. You know why? Because they leaving. When the economy crashes, they're going to run out that front door. These people over here, they have no place to run to. Don't you run. Grant Cardone. I'm showing you how to create real wealth investing in real estate. Stay right there.
Look, I'm not successful if you're not. I will not fulfill my mission. My mission is to help people.
You're in the right place at the right time.
Brother, don't see my life.
The greatest entrepreneurial conference on the planet.
$10x your lives. 10x the lives of the people around you. Give more than you take, and I promise you, you will get more than you ever dreamed of.
Mail tag. More sales in less time. Know when your links are clicked on within your emails. Track performance metrics, giving you unlimited real-time email tracking. We give you precise email scheduling. Make sure your emails arrive at the right time every time. Increase your open rates and perfect your multi-time zone sending. We automate your follow-up process. See how it can work for you. Try it completely free for 2 weeks.
Hey, welcome back. Well, welcome back, and we're taking your calls, 305-865-8668. Every Monday, 12 p.m. Eastern Standard Time, I do this for you for free. Hey, if you're watching, remember, we do this show as a service to those of you who love real estate. If you like what I'm doing here, for free, by the way, and I love giving it to you, do me a favor, just a little reciprocation here. Write a review on the show, okay? Write a review, give it 5 stars. It helps. Write some comments, share it with your buds, your peeps. Let people know, man, Grant Cardone's out there. He's educating me every day, educating me every day on the real estate game. All right? So right before the break, we're talking, today's show is about this. Single family, the single, easy to buy versus the multi, okay? Particularly commercial multi. That means 5+. Now I'm telling you, I'm not going to touch 5, I'm not going to touch 7, I'm not going to touch 9. And the reason why is because of what I shared with you before the break. The number of doors in real estate is the single most important number in all of real estate. Give me the image. Full screen, just blast it up there, okay? One house at $1,500 a month. The maximum income on that deal is $1,500. 32 units at $800 a month. The maximum income, if all of them are rented, again, you're protecting yourself. You're diversifying with rooftops and square footage. Single family versus the multifamily. The number of roofs, the number of doors right here is what protects you in economic turndowns. We will have a turndown, folks. We will. The bigger I can scale this, if I could go from 32 to 320, the more protection I get. Also, that property creates more income so I can have more amenities. People will want amenities when contractions happen. If we have a major contraction in this country, and we will, America probably will not give up this device right here. They are pinned to it. There's some things they will not give up. Everybody agree with that? 305-865-8668. If you got a deal or you got a question, I'll help you. On the 4th and 5th of February, I am doing a 2-day master class for real estate investors. Because your problem is, I can buy this deal with little money down, and I can't buy that deal because I don't have the money, or I don't have the investors, or I don't have the funding, or I can't find the deals. Okay, I don't know how to manage that deal. Those are the 5 basic reasons you're not buying these bigger deals, because anybody, if I could just add a 0, that would be even better. Anybody in their right mind is going to say, if I love real estate, I love 32 more than 1, and I love 320 more than anything. Okay, what's going on, guys? Okay, okay, good. Let's all stay focused today on the real estate game. The number of roofs, the number of doors, the amount of income will protect you going forward. Location's vital. Debt is vital. Property amenities is vital. Management is vital. And long-term debt is vital. So how good a debt can I get on this deal? I don't know. This interest rate's probably going to be, unless you're going to pay cash for it. Unless it's a flipper and you paid 40 and you're going to spend 20 and you got 60 in it, okay, and you're like, oh my God, man, I'm getting $1,500 a month. Okay, good. What I would do if I were you, I'd sell this thing for 80 grand and let somebody else collect the 1,500. Get your money and move. This is not a real estate investment, folks. This is a real estate liability waiting to happen. If you go back the last 20, 30 years, you're going to see single family homes over and over get crushed. Over and over, the single family home in a neighborhood. Just drive neighborhoods where you live. Oh my God, that house over there, that's amazing. That'd be a good investment. Just track it for the last 20 years. Half the time it's empty. Okay, if there's no wall around it, trust me, it's not going to be worth anything in the future. If it's in Beverly Hills, it's got a wall, it's got ivy going up there, it's got not tenants, but people working on the property, landscape. It's going to be great. But everything else in Los Angeles is garbage. It's just an accident waiting to happen. Why? There's no income. When these people move out, income goes to 0, your liability goes crazy. How does everybody move out of this location? Even if 4 people move out, what's up? I still got 28 people paying me rentola. The number of units in real estate, the number of units, the number of doors equals your protection. The number of doors equals income, okay? The cash flow, number of units times cash flow over time causes appreciation. Let's talk to our callers. Do you have a deal or do you have a question? Reza, do you have a deal? We've been talking about LA. Do you have a deal or do you have a question? Do you have a deal or do you have a question? And I know all of you are going to talk about, oh my God, if I'd have bought a house on the ocean in Orange County, I would have made so much money on one house. One-time deal. Scale your business, folks. Okay, by the way, if you would have bought 300 units in Orange County, not on the ocean, 2 miles inland, you'd have made a fortune. Not a lot of money. Yep. Rez, you want to talk to me, Rez?
Yeah, I have a question, Grant.
Please bring it on, ding dong.
Okay, I'm a builder, and I build single-family houses in Los Angeles. I'm kind of I started 3 years ago. I'm an architect as well. But I see the market is going down now. I mean, in Los Angeles, there's 10% drop in the neighborhoods that I'm building. I wanted to know what's going to happen. I see what are you saying about the single-family houses and what's going to happen, when the market is going to crash. Do you think, what should I do? Should I go do multifamily deals?
First of all, my friend, you need to be willing to move out of LA.
Exactly.
You guys aren't, you're not a light post, right? You're not fixed. You're not a toilet. The toilet's fixed. The toilet can't move itself. Somebody else has to move it. So I don't know why you guys keep waiting for the reason to move. Move, man. There's already people moving out of Los Angeles. All over California, people are migrating out. Toyota left, man. Toyota left, guys. Toyota Motor Company left California. Well, Facebook's actually buying some stuff over there right now too. So you guys got to figure out, man, where I want to go where there's opportunity. So if you think that 10% pullback in the Los Angeles residential, that's the only thing that's pulled back, not apartments. Apartments, multifamily, income-producing properties in California, not retail. Retail's pulled back because it's susceptible to Macy's going out of business. But multifamily apartments in California. I was with the guy this weekend. He's like, I'm never going to do business in the state of California again. I'm going to move all my business. I'm selling every business I have in California. He's like, I'm done. I'm done dealing with the people there. So I would just tell you, dude, first of all, you're building a product that people no longer need. Rez, people do not need this house. They never needed this house.
Right.
We were made to believe this was a dream. In 2008, the Band-Aid got ripped off of the hypnosis. I got to have a house. I need a home. You got 70 million millennials. 70 million millennials are like, I don't need a house, dude. I just need a place to live. I had a buddy of mine this weekend tell me, he says, he's an uncle to a nephew. He gave his nephew a car. He's like, I bought a car for you. The nephew says, Unc, I don't really want this responsibility. Why don't you just give me $1,000 in an Uber account? I don't really want this responsibility. I just want an apartment downtown with an Uber account. That's all I want, and my phone. I don't even want a girlfriend. Too much obligation, too much responsibility. See what I'm saying? Like you guys got to think about this thing. Is this something I really need? Oh, I do need a roof, though. In fact, I would like a roof and a swimming pool. I'd like a bunch of roofs, and I got a big-ass swimming pool over here and a jacuzzi right here, and I got a lot of people live here, so I can meet people, too. And if it's a nice place that's gated and there's pretty girls, then I'm definitely going to go there. Keep the rent around $1,500 a month. Dude, I'm good. Get me close to where I'm working, I'm good. No obligation. I can move every 10 months. Once I hit all the women on that one property, then I can go to another property and infect it. Mobility, baby, mobility. You know, you got 80 million baby boomers that are dying. They're like, that's the way they want to live. They want to live like this. Stay with me, Grant Cardone, talking real estate on Mondays.
Look, I'm not successful if you're not. I will not fulfill my mission. My mission is to help people.
You're in the right place at the right time.
Grant Cardone saved my life. The greatest entrepreneurial conference on the planet.
$10x your lives. 10x the lives of the people around you. Give more than you take, and I promise you, you will get more than you ever dreamed of.
For 30 years, I've been investing in real estate. These are large multifamily apartment complexes around the United States that are cash flow positive when we buy them. 97% of my net worth is invested in these properties because I believe in them that much. For the last 12 months, I have been working with the SEC to provide non-accredited investors the opportunity to invest alongside me. If you like the idea of investing in real estate but don't have the time to manage it, you like the idea of investing cash into real assets but don't have time to find the deals, manage the deals, fund the deals. Maybe you don't even know where to start looking. And regardless of what your decision is, let me just say to you that the best financial advice I can give anyone today is what has worked for me. Look forward to you investing with us. I look forward to you being a partner. By the way, this is not a REIT. This is a real asset. You're a partner with me in the exact asset that we're buying. Okay? Good luck investing.
Wealth Dynamics is an independent wealth creation firm. We have products and services that help you make money, keep money, and multiply money. You cannot build wealth without doing all three of these things. We save our clients 25% on debt, insurance, taxes, and investment fees, increase income by 30%, guarantee tax-free liquid savings with cash flow banking, and secure 8 to 10% fixed annual returns on your investments without Wall Street. On average, we can do this in the first 90 days of working with you. Simply schedule a free consultation with a wealth coach. Our services often cost you nothing more than what you're already spending. Go to wealthdynamics.com/contact to schedule your free consultation. Wealth Dynamics.
Hey, welcome back. Grant Cardone talking real estate. Single family home versus the multi. If you have a question, call me. If you have a deal, talk to me. If you want to spend 2 days at my master class, go to grantcardone.com/class. Class is $10,000. There's 64 seats left. It's limited to a couple hundred people. It's going to be amazing. 2 days, and all you get to do for 2 days, I sit in a chair and answer your questions and use my smart board. Bring me your deal. Bring me your questions. Where do you get debt? Where do you find deals? How do you manage them? How do you raise rents? How do you get long-term debt? How do you renegotiate debt? How do you refi? How do you 1031? Dude, we're going to do 2 days of nothing but you ask, I giveth. You just got to. This is for serious real estate people. I know some of you are like 10 grand. I could never spend 10 grand, dude. If you can't invest 10 grand to learn about real estate, how the hell do you think you're going to buy real estate? All right. This loan right here for $58 million required me to write a good faith deposit. So if you guys can't spend 10 grand to learn, how are you going to write a check for $1,172,000 to get the loan started? That's what I had to write a check for to get the loan started. We've been negotiating with these people at Fannie Mae for like 3 weeks to get the best deal we could get. Lender intends to sell the mortgage loan to Fannie Mae pursuant to a commitment in accordance with Fannie Mae's requirements, the Fannie Mae commitment, either as a cash purchase, cash trade by the Fannie Mae Multifamily Trading Desk. What is that? The Multifamily Trading Desk in exchange for the issuance by Fannie Mae of a mortgage-backed security, MBS, backed by the mortgage loan to an investor in the MBS selected by the lender at specified rate. See, most of you guys be like, too much data. Dude, if you don't know what this means, what's a recital? If you don't know what this means, you can't do deals. And this is where most people get killed right here. I don't know what they're talking about. So you end up being, this is what Wall Street hopes and prays for every night. Keep America stupid. Wall Street doesn't want to make America great again. It wants to make America stupid as possible. Let's talk to turn the people into sheeple.
You got Corey in Texas.
Corey in the TX. What's up, player? By the way, let's get Rez in LA, because I can show Rez where he could start buying real estate, making money now rather than being a builder and having a liability situation for the next 10 years.
Corey.
Any of you that want to go build this house right here, you're crazy, man. You guys are crazy. Do you know that when I build a house, I have 10 years of liability? When I build an apartment building, 10 years of liability for defect construction. When I buy a piece of real estate that's already built, I don't have any liability. The builder does. Corey, what's going on in TX? Cortez? Yeah. Cortez, what's happening?
Hello.
What's happening, dog? Talk to me, man.
So
Talk to me.
I had a question more about the how and when to invest in real estate, because right now I'm active duty military, 24 years old.
Yeah.
So I have 5 years left in my contract.
Yeah.
And, I don't have the opportunity to make any extra income because right now I have weekends off, but that's not always guaranteed.
Yeah.
So I've just been saving, watching your videos, and kind of getting educated on real estate. And people have been trying to get me geared towards the wholesale route. But I just wanted to know, what do you think I should do?
Yeah, dude, this is what I think you should do. First of all, thank you for your service. I really appreciate that. Number two, you need to start shopping real estate every weekend. Do you have my book yet?
Yes.
Okay, good. So any of you that want the book, by the way, while you're watching the show today, get it for free. GrantCardone.com/free books. No, CardoneCapital.com/book. CardoneCapital.com/book. So check this out. What he should be doing right now, Cortez should be doing on the weekends, is he should be shopping real estate. He probably rents right now. Shop the building that you're in. What's a 1-bedroom, a 2-bedroom? What's the difference? What's the manager? What's the complications? See if you can meet the owner. Then shop the real estate next closest to you that's similar to the one you have. Find out what they would price for. What's the cap rate? What would they exchange at? What would a bank? Learn everything you can. Practice on the stuff in your neighborhood. Let's talk to the next caller. Grant Cardone, every Monday I come to you to talk real estate. We drop this on YouTube and Facebook. iTunes and Stitcher, wherever you're watching or listening, please comment. I love your comments, folks. Please review, okay? I do this for free every Monday to try to help you. Jerry.
Yes.
What's up, Jerry?
Oh my gosh, Grant Cardone, what is up, man?
Come on, Jerry. How you doing?
I'm great. Hey, real quick, I'll get right into it. I'm 14 years real estate agent, 13 years investor, but I've flipped my whole life. I've flipped properties.
Yeah.
And I got kind of a curveball in my hands, and I want to make sure I'm not missing something on this.
Yeah, okay, so first of all, tell everybody the downside of the flip, man. You've been doing it, so I want them to hear from the horse's mouth.
The biggest downside is the taxation. Taxation is theft, man.
Yeah, because what's happening is you're it's a job. Flipping homes is a job. Would you agree with that?
I would agree.
It's not an investment.
Well, I mean, the good thing is the huge checks you get, but then it's always, okay, what's next? You got to find another one and another one.
It's a job,
and another
dude.
one.
It's a job. Okay, now, different than this, and this is what he's talking about here. I can take this and flip it. I buy it for 40. I sell it for 80. Okay, I make 40 grand, and the government just taxes him like a freaking, like they crush him for a short-term gain. If he holds on to it for a year and one day, then he gets capital gains. But the problem with holding on to a flip is, oops, one, money, costs you money to hold it. Two, what if the market turns? Dude, with a flip, the thing is time. Time is, you're so time sensitive. The faster you can flip it, the better. The faster you do flip it, the higher the government taxes you. Now he's got to go find another deal. What I'm doing over here is I'm not flipping anything. I'm buying stuff and waiting for rents to rise, and somebody else comes along like Blackstone or Goldman Sachs and says, hey, we want to buy that deal from you, because they want to buy the income. But you have a deal with some hair on it, right?
Yeah. So basically, long story short, I got a single family home. I bought it for like 100. I'm 30 into it, and it's about to be put on the market. And I just got thrown a curveball where they got approval for, there's a giant field across the street. There's like, I don't know, 60 to 100 acres, and they just got county funding to start construction on this big project that was just approved, which is going to include a hotel, like 30 commercial retail places, single-family homes, apartment complexes. It's like huge. So, and my home is actually now going to be on the major intersection to get into this place.
Yeah.
So I'm thinking it's a no-brainer to keep this.
No, dude, blow it out, bro. Blow it out. Go blow it out on the good news. Blow it out on the good news, man.
Yeah.
Raise the price, sell the story, bro. Let somebody else buy the inflation.
Okay.
Let somebody else buy the dream, bro. Let me tell you what comes with dreams. Half the dreams people are having are nightmares. They ain't all pretty women. Okay? Some of these dreams are like, oh, god damn, there's a lot of hair on your arms.
You said something about like...
You're a little rough with me right there, man. A little rough with me. I was in prison while that happened. That did not feel good. Oh, goddamn, I can't stop the dream either. Like a lot of these dreams, sell the dream, bro. Let somebody else buy the dream. Pick up your 50 or 60 grand and move on. You know you need to be in the multifamily game. All you flippers out there, by the way, I'm not talking bad against a single family. If you got to do it for a little while, do it. You know, look, I'll go out on the streets and beg for money if I have to. I'll do what I have to do to get my family where they need to be. But at the end of the day, I want income. I want income. And I want income through all economies. I want a lot of income. I'd rather a little bit of income from a lot of places, because over time, it can weather time. It's got to be able to weather time. If the economy collapses today, none of this shit's going to happen. None of this is going to happen right here. The hotel is going to stop. None of it's going to happen, right? So what happens? He's got to hold on to this until the cycle starts again, which would be a decade. And then he's got to pay to keep it. And then, not to mention pay to keep it, he's got to worry about it every night. Shit, man, when's this going to be over? Okay, this is why all my buddies, every one of my buddies that was invested in real estate in 2008, 9, and 10, every one of them busted out, except me and one other guy. And me and that one other guy did a couple things. We bought affordable multifamily, and we did not over leverage. Just sat and wait. We waited. We just waited for the cycle. And the whole time we didn't miss a payment, paid the bank, income's coming in. We weren't sweating it. They're in bankruptcy court, they're restructuring loans, they're hiding, they're scared. They're trying to sell, they're trying to spend money on stuff before the banks take it away from them. Guy running out trying to buy a Maserati before the banks seize all this stuff. I mean, they're just turned into total criminals. Good dudes too, they just got cracked. They got cracked and they deserve to get cracked because they were betting, man. Some of this flipping stuff is a gamble. Red or black, red or black. Okay, go ahead. I think you had another comment.
Well, you know, I'm torn here. I could run it out for a while. This is like this is possibly like a freaking, you know, Rite Aid could be put in here in the future, you know, or something huge where I could rent out just the ground and make enough money to be pretty comfortable. So
yeah, but dude, there's 1,000 of these stories. Okay, there's thousands of these stories. Like we just sold a deal in Nashville, Tennessee. I made $28 million. Somebody says, first of all, everybody said, oh, you'll never sell it for that. Now that I sold it, they're like, oh, you should have held on. I'm like, you're an idiot, dude. You think I can't find another deal like that? There's plenty of deals, bro. Pick up your dough, and then start playing the multifamily game. Imagine if you had something where you could put 30 or 40 units right there.
Yeah.
There's another score, dude. Don't think that's the last score, folks. Okay? Don't fall in love with a piece of property. It's the old thing about oceanfront property. There's a shortage of it. Getting a plane. There ain't no shortage of oceanfront property. There's oceanfront property all over this planet. Every country's on the ocean. So it's just bullshit, man. Just go find another deal. And if you run out of deals in the United States, go to Singapore. Go to Dubai. Tell me Dubai didn't have some real estate deals. So you got to be committed, though. You got to be committed to the game and say, hey, I'm a professional real estate person. Are you coming to my conference? Are you coming to my 2-day event, my 2-day real estate event?
I'm not.
Dude, once you come to that, man, let's figure out a plan for you.
Okay. I would love to. I was hoping to cash out on this soon, but...
You ought to cash out. You ought to go pick up your money, bro. Sell the dream, sell the idea. I guarantee you, 6 months from now, you're going to be like, man, I wish I'd have taken your advice, or it's a damn good thing I took your advice.
Okay. What if I rent it out? This thing's it could cash flow like $500 a month. What if I rent it out and pull out the equity and just keep going? What do you think about that?
I mean, you know, okay.
Yeah. All right.
Yeah.
So what kind of deal can you give me on a ticket, man?
Hook him up for our 2-day event, our real estate course. Okay? Take care of him. All right, Grant Cardone, Real Estate Investing Made Simple. That's what we do here, folks. I just answer your questions, look at your deals. If you got a deal, I'm looking at a deal that just got thrown on my desk, Parkview Apartments. Do I have time to do this deal? How much time we got? Yes, sir, we got time. This is a deal. We got any more callers? We good? Okay. We got a deal. I got a 72-unit deal here that somebody sent me. Jeremy sent me. 72 units. I like that. Love the size, don't I, Francisco? Love it. Okay. 32 is my number. At 32, you start getting enough economies of scale. At 72, I'm like, I love it, man. Now I'm thinking what? I'm thinking, woo. Oh, $40,000 a door. I like it. I like it a lot. I'm starting to love this deal. What's wrong with it? $2.8 million. Okay, I'm gonna need. What do I tell you? I'm gonna need on this for a down payment.
You'll probably need like $700,000.
I need about $1 million in this deal. Let's say $900,000. Okay. I need $900,000 for sure. Okay, I'm gonna finance $1,980,000. Easy to get a loan on this, by the way, because it's big enough. The bank loves these deals. The bank loves numbers of units. Okay, the bank doesn't like 5. All you got to do is go check it out. Go check it out. Say, I want a loan on a 5-unit deal. Oh, no, we don't do that. I want a loan on one house that I'm going to live in. Oh, yeah, we'll do that. Shit, we are a prisoner. Here you go, dude. Here's your prison. Here's your key. That's why these guys love this. They know you're not going to leave that. Okay, this, you're going to leave. Because this is not going to produce enough income. Now, when I go over here to 72 units, they're like, do you have experience with handling tenants? Do you have experience in real estate? Do you have experience holding properties? Do you have experience fixing things? That's what they're going to want to know first. This is going to actually be a very easy deal to get a loan on. Until I find out that this deal is in Jackson, Tennessee. And the return on this deal is about 3% in Jackson. And they're going to tell me that the deal I need to do here is increase the rents. If you look at property values in Jackson, Tennessee, just south, I think, of Memphis. Can you show them this picture? See, this is the problem with this property. Look at the pool. Is that leaves in the pool? What ignoramus would even take that photo?
It looks like shadow.
That's not shadows, man. That's not shadows, man.
No, I don't know.
Dude, that's go back in. Go back in. Go in tight.
Oh, yeah.
That's not leaves. That's the tree up there. He's thinking that tree is reflecting in the pool.
Yeah, you're right.
No, you got to look a little closer. This is garbage in the pool. How are you going to raise the rents? If people will stand for garbage in their pool, could be, by the way, you could. Maybe you could raise the rents. Brick. Let me show them what it looks like. Parkview. Dude, I'm starting to like this deal, though. Let me tell you why. Because anybody that'll take a picture of shit in their pool, they ain't in love. Okay. Looks like this. Looks good, doesn't it? Okay. No cars there. That's not good. No cars there. No, those. It's wintertime, so the leaves dropped. Okay. Rent on the homes, $635 and $750. 64 units at $635. It produces $562,000 a year in income. $562 in income. I'm just going to write this deal for you real quick, okay? $200,000 in expenses, regardless of what they tell you, that's what it's going to cost. $362 NOI. If I take the 362 NOI, if I'm anywhere near Memphis, I want a 7 cap for sure. So I'm going to divide that number by 7. 362 divided by 7. Oops. 362 divided by 0.7. $5,171,000 for the deal, and I get a 7 cap. They're selling this deal for $2.8 million. Is that right? Is that what it says? Dude, this deal's a steal. Okay, what don't I know? What don't I know? Annual income, $562. 88% of these deals are 2-bedroom units. That's good. They're saying the NOI on this thing, oops, okay, there it is. They're saying the NOI on this thing is $231,000 a year. So I did something wrong on the NOI. I don't know why. They're saying the income's $562. And all expenses, vacancy, 10% vacancy, they're saying. That's good. Gross effective income's $511. Other income is $35. Total gross income $547. Total operating expenses almost $300,000. I wonder why. The expenses should not be that high on a 72-unit deal. Not at $615 a month. Something's wrong on this deal. Okay, something. So that's $252. No, what they could be doing is the owner might be robbing the deal. Slamming, painting his home, adding it to this deal. Painting his aunt's home, slamming the deal. 72-unit deals, they always do kind of funky stuff on it. Cap rate 7.5. Says cash flow after debt service. They say the debt service on this deal is $171,000, and then it makes $80,000 a year. $80,000 a year. And what did we put down? $900,000. Yeah, cash on cash is 10%. So look, they're trying to find some guy. They're trying to find some guy that'll take a 10% return. I'm going to buy the deal behind me. I'm going to just tell you right now. I'm going to buy the deal behind me. I'm going to buy the deal behind me and earn 6% on my money. Okay. I'm gonna earn 6% of my money and not have leaves in the pool. You understand what I'm saying? Rather than be in Miami Beach, Delray Beach, Florida, and earn 6% rather than 10% on a deal in Jackson, Tennessee. Nobody even knows where Jackson, Tennessee is. I mean, they couldn't even come up with their own name. Couldn't even come up with an original name. Memphis is Memphis. That's original. You don't want to be investing in Memphis, Tennessee, man. Memphis, Tennessee hadn't done well for 25 years. It'd be like being in Jackson, Mississippi, man. And nobody going there. People leaving there. So you guys got to know what market, because here's the problem with that deal right there that I just looked at. Exit. How do you exit? I'm going to spend 2 days in a master class, February 4th and 5th, talking about how do you buy a deal, find a deal, fund a deal, but most importantly, how do you exit the deal? How do you leave the deal? When we leave it is when we make it. Psalms 113. How we leave it is how we make it. And then we droppeth the mic. Look, if you don't have my book yet, grab it for free. CardoneCapital.com/book. CardoneCapital.com/book. How we make it is how we leaveth. On February 4th and 5th, 2-day masterclass. Just bring your questions, bring your deals. I'll underwrite your deals and answer all your questions for 2 days. This is limited to a couple hundred people. It's almost sold out already. GrantCardone.com/class. GrantCardone.com/class. Promise you, it'll be worth your time. You're going to get a book. You're going to get a book when you get here. The book is going to be empty. And you're going to ask me questions, and we're going to fill that book up. If you've ever had a question, man, God, I wish I could show him this deal, or I wish I could just spend some time with him understanding what he thinks about cap rates and funding and financing and interest rates and management, and where do I find a deal and who do I call? I'm going to actually call brokers and show you how to find deals and negotiate deals. If you got a deal, bring your deal. I'll help you negotiate that deal while you're in the class. GrantCardone.com/class. It's $10,000. It's not for everybody. If you're not serious about real estate investing, if you're not serious about building a real estate portfolio, don't bother. Don't waste your time. Okay, this is a very serious class. If this is, maybe you need a basic class. If you haven't read the book yet, maybe start with the book. A lot of people that are going to our 10X Growth Conference are hanging over. 1st, 2nd, and 3rd. We do the 10X Growth Conference here in Miami, and a lot of people are staying over for the 4th and 5th. The website is grantcardone.com/class. Bring your deals, bring your questions. How we leaveth determines if we maketh. Psalms 113. 10X. God bless you guys. Be great. Hey, remember this. Peace, love, and cash flow.
Look, I'm not successful if you're not. I will not fulfill my mission. My mission is to help people.
You're in the right place at the right time.
I've never seen my life. The greatest entrepreneurial conference on the planet.
10X your lives. 10X the lives of the people around you. Give more than you take, and I promise you, you will get more than you ever dreamed of.
My name's Grant Cardone. This is the Cardone Zone every day, every damn day. I'm going to show you how to get money a lot cheaper than this. Hey, get yourself in a position to sit in that chair right there. Are you the solution or are you the problem?
Yeah, well, we're talking about what does it take?
They don't know you, and they're not thinking about you.
They
do know you, and they're not thinking about you.
They forgot you. My name's Grant Cardone. You are in the Cardone Zone, where I wake you up, I shake you up, I punch you in the face, but mostly, I'm that good uncle.
What's happening, Cardone?
Yeah, what's happening, man? You got a deal or you got a question?